Nvidia Corporation, ticker symbol NVDA, is $255.41 a share. Since January 1st, it has gone up almost 80%. It has had an absolutely meteoric rise, and the stock seems to keep on climbing higher and higher. What we're going to be doing is talking about the stock, going to my automated stock valuation spreadsheet. I'll talk about more in this video what this does, but we'll be looking at the discounted free cash flow model, the Ben Graham formula for value investing, and the comparable company model to give my fair value of Nvidia. So Nvidia did rise recently. It rallied on Thursday. This is an article from the Motley Fool. I don't recommend this, but it does summarize it quite well. Nvidia announced that its DLSS3 technology would support a number of popular games and franchises. These include Forza Horizon, Diablo 4, Redfall, and also the type of tech is powered by artificial intelligence, and it'll be one of the world's most popular game engines. People love AI at the minute with ChatGPT, so this is one of the reasons it rallied almost 5-6%. Even in the pre-market, it's up. So if we look at the stock over the last 5 years, it was at its all-time high at $330, dropped almost 65%, and has rallied strong again, as I've said. So since its bottom, it is up almost 127%. Let's have a look at my stock summary sheet. So this is a different one I'm showing in my other videos. This is a fully automated stock sheet. Well, apart from one field, but I'll show you that. But all I need to do is type in the ticker here, which is Nvidia, NVDA, and in combination of an API and Google Finance, it'll generate all of the data you can see here. So Nvidia Corporation, $255 a share, $13 change, 5% on the day. Current market cap of $631 billion. P/E ratio looks quite high, 146. Earnings per share, 1.47. Shares, they have 2.5 billion. Very, very small dividend, which pays around about 16 cents a share. Otherwise, it is 0.06. Now, these are the fields that we care about. These are populated manually using a external company's API, and we can first look at the revenue. So this is from 2017 to the current year. We'll ignore the trailing 12 months as because Nvidia has not released their latest earnings, so we'll just be looking at these dates here. I need to update the fields here in terms of the dates, but you can see it's gone from 11.7, 10.9, 16.7, massive jump up to 27, and then 27 again. So revenue is up, and obviously we like that for many different reasons. Now, what are they doing with the revenue? Are they profitable? Well, we can see here 4.1, 2.8, 4.3, 9.8, and then down to 4.4 billion. So yes, still up overall, but you can see there's a massive drop off from the previous year to the current year. Still profitable though, still increasing. Shares outstanding, well, they did do stock splits and things like that, so these numbers don't look exactly correct, but it seems that if we look at the previous years, Nvidia has been issuing more shares and then buying them back right now, but this is due to the stock split. So the sheet doesn't really take doesn't understand that there is a stock split. It just reads the numbers as it is. And finally, free cash flow. Is the free cash flow increasing? Yes, it is. 3.1 billion, 4.3, 4.7, 8.1, then down to 3.8. So the previous year, actually, I'm just going to update these now because let's just fix these so that I can see them a little bit better. But as you can see, 2022 has not been as good of a year, but then the stock has rebounded pretty strong. Then also we have the 1,000-day chart. If we want to change this to 255 to see a more recent one, you can see it is down, and that was the point we showed there. 30-day moving average up 21% price performance, 255-day obviously down, and there are the moving averages. So let's go on to the valuation. Well, this is discounted free cash flow. We've got the revenues estimated, the net income, and then the free cash flow, and it's discounted days value, and it does not like the free cash flow. This is with assuming that in 2023 the cash flow is growing, not like it was in 2022. This puts the stock at a $33 stock, and if we look at the breakdown here in the numbers, I think these are all pretty fair. Revenue growth rate, this is pretty all over the place, so I've took an average. I mean, even if we do go to the high side, 38%, still a $70 stock, and that seems a little bit high, so we'll bring it back. Net income margins, these are about the same as well. I'd say maybe a little bit higher. Let's bring it up to about 30%, $35 stock, and even with our original 38%, it's still miles off the value. So we have a look at the Ben Graham adjusted formula for valuation. What this does is it takes the value, the earnings per share, that compares against a P for a no growth company based on the growth, and then the corporate bond and the current yield of a AAA bond. So if we look at the analyst expectations for the next 5 years, now as I said, this is the only field that's not automated because Yahoo Finance doesn't let you, but they're expecting around 21.2% of growth over the coming years, so 21.2. That gives a fair value of about a $63 stock. Now if we go back to the share price of Nvidia, when was the last time they were $63? Well, you've got to go back to basically the bottom of the pandemic, just after that big rally. Now that was still a good price for them there, but they've obviously gone gangbusters since then. And then the final thing I want to look at is the comparables companies model. So what this is it's a way to evaluate stocks using metrics of similar businesses and similar sizes. Now, as I said, this is fully automated and I'm quite proud of this sheet. So if we come up with some companies, let's have a look at Qualcomm, QCOM. So what it'll do is it'll grab the ratios here: EV to revenue, EV to EBITDA, PE. Another, well, obviously, of course, AMD, another competitor of theirs. And then finally, we will look at Intel, which is INTC. Now, one thing that we can see immediately is all of these companies have similar market caps, which is the equity value. Nvidia is almost 3-4 times the size, which we'll see in terms of the ratios. If we look at the EV to revenue ratio, what this is the enterprise value to revenue. The lower is better, and Nvidia is currently the highest at about 14.6. Other ones 3.3, 4.8, and 2. EV to EBITDA, this is enterprise value to EBITDA, which is earnings before interest, taxes, depreciation, and amortization. And once again, Nvidia is the highest by quite a margin. AMD is the next with 19, and you can see Qualcomm and Intel are much lower. Ratios are quite high again. And PE ratio, well, if we look at the PE ratio, 108, 103, 11, and 15. So it looks like QCOM and Intel are not relevant in terms of this. If we look at getting the averages, this gives 6.1, 22, and 59. Based on these averages, it will calculate the stock price based on these metrics, $62, $41, and $105 a share, which gives an average of about 70. So in fact, this is about $70 a share, this is about $70 a share, and this is about $50 a share. So based on the models, that's where it's valued. Now, I'm just going to quickly change this to get rid of the averages, because I don't think even Qualcomm and Intel are even fair estimates. Even if it was as fairly valued as AMD in terms of ratios, it is still overvalued. $120 stock there, 101, 73, and 187. I think that is its closest direct competitor to see what it's compared against. So according to models, I would say this is overvalued. Yeah, please give a like if you enjoyed the video. Check out my Patreon for this sheet. It's fully automated, as you can see. You just type in a stock and it will automate everything. Microsoft gets it from Google, gets it from the API, generates the values here, and then you can even use this in here. Now, this is a free API I'm connecting to, so it only has limited stuff, but a lot of work has gone into this, as you can see. And then, Apple uploads it there. Right, catch you guys later.